Hello, welcome to the Full FX Unfiltered. My name is Colin Lambert. I'm publisher of the Full FX, and this edition is in association with TraditionData. And I'm delighted to be joined by Sal Provenzano, an old friend of mine who is FX product manager at TraditionData, and Ian Sams, who is European head of data products at TraditionData. Gentlemen, great to talk to you today. Sal, I'd like to start with you, if I could, in terms of to give us an overview of what the TraditionData offering actually is.
Sure. Nice to join you and see you, not in person, but that's okay.
Yeah.
Technology, right? So really, TraditionData is the financial market data division within Tradition Group. And Tradition is one of the largest dealer brokers, been around over 30 years in 30 countries. And really what TraditionData does is it sources its market data from basically two sources. One is the global presence of the brokerage desks around the globe, as well as our market data analytics division, and combining it to an extensive offering cross-asset class around FX and money markets, interest rates, fixed income, and commodities and energy. Specifically in the FX space, we've got it broken down into two categories. One of it is the traditional FX market data tied to spot, deliverable and non-deliverable forwards. We concentrate on north of 60 currencies. We have 260 forward currency pairs, both deliverable and non-deliverable. The report capabilities are real-time, hourly, intraday, end of day, and historical, and that the historical varies based on currency pair. The packages that we have available are global, regional, and sub-regional. And basically, just to have the ability, if someone wants a specific product and say scan these, we can offer that. If someone wants global FX, we can offer that. And from an access perspective, the clients can either choose direct from us via API or whatever connection they want. And in terms of the channel partners, we channel partner with likes of Refinitiv and Bloomberg. And many of our clients meet us there in terms of requesting to be able to get our data through them.
Yeah.
In terms of the FX options market data product, it's comprised of a hybrid solution between voice and electronic, which between the global broker desks and Valbroker, which has been around for over 20 years, and also partnering with Numerics, which is a financial data analytics firm that provides us much more extensive analytics and currency pairs much further out on the curve. Specifically, in the case of the analytics for Numerics, it's out to 140 currency pairs with much more deltas, 5 to 35, and at-the-money straddles, butterflies, risk reversals, things like that in that nature. Now, in the traditional option side with the broker desks, because it's much more focused on the community of interbank participants, the focus is really on about 50 currencies. Again, without the money straddles, butterflies, risk reversals, but of course, emerging markets and exotics are also a part of it. And the structure of the desks are very similar across the globe. We have about 60 brokers globally, represented in New York, London, other parts of Europe, such as Frankfurt and Copenhagen. And in APAC, we have desks in Hong Kong, Singapore, and Tokyo. The majority, I would qualify those desks as being very consistent and with a lot of continuity with experienced brokers that have been at it for a while, obviously, because the desk has been around for over 30 years. And I would call them pretty much specialist brokers. And the desks themselves are comprised of G10 in regional emerging and exotics for each region. The New York desks main concentration and largest market shares in Canadian, Mexico, and Brazil, because we handle LATAM out of New York as well. Our FXO desks in Asia have a significant market share, but actively across the globe in those desks, we have is probably about 15 to 20 most active currency pairs. So overall, I mean, the Valbroker, just getting back to Valbroker is, at this stage, it started out early 2000s with about 6 banks. And now we're at a point where we are the only, through these mergers and everything with TFS ICAP, we're the only broker supplying pricing into it.
Yeah.
But it's comprised of around 30 or 40 interbank participants. And, the idea is what you see on the platform is executable pricing. So if you combine those three entities between vol broker, numerics, and the broker desk, it's a compelling offer.
Yeah. Yeah. I mean, obviously, a big emphasis there from Salsing that come through to me was the hybrid element of the business, because those voice broking desks are still very, very valuable in swaps and options. Contrary to popular opinion, we do sometimes acknowledge other asset classes, such as interest rates. I mean, is it a similar experience for you with the interest rate environment in particular?
Absolutely, yeah. I mean, we've always, I guess, historically just been selling the exhaust, as it were, from the desks themselves. But certainly now recently, we rely heavily on analytics and modelling. Not just the desk do as well, obviously. I mean, we use those models and those prices that they produce for the desk, and the desk maintain those based on observable market pricing. But certainly now recently, we're seeing a move away from, or certainly data requests for content that isn't that liquid or doesn't really trade. And certainly we're seeing a move now to producing data for our customers that, again, we don't really see much liquidity in. They're all based and built, on the correlation to other asset classes that we do or codes that we do trade. But yeah, we're certainly seeing a shift away from the traditional desk pricing.
And really, I mean, in some ways, from an outsider's perspective, I would look at that and say, actually, that's going to be a key differentiator. The fact that, as you say, you've got those desks in those locations, quoting, for instance, emerging markets that allow you to live a rarity in this world, which is actually unique data.
Absolutely. I think that if I was to just expand on what Ian was saying, if I look at TraditionData, I would say that we're a supplier of reference data for various purposes.
Yeah.
And in some cases, it's for trade validation, if you're talking about it from a bank perspective or anybody's running any kind of models. But it's also around asset valuation, because we have customers that are interested in understanding if they've got a portfolio of assets that are denominated in various currencies, they need to have some kind of reference data to be able to put valuation on those assets. So our customer base is not just the interbank space, to just expand on what Ian was saying. It's very much around others, but we'll get to that in a follow-up question. But it's just the idea that it's more of a commercial market data product with more analytical in nature. Just to close the point on what Ian was saying.
Yeah, I mean, and on that point, Ian, I mean, how are your customers consuming and using the data that you're providing for them? Can you give us a few examples of how they would embed it into their business?
Absolutely. I mean, I think Sal's already touched upon some of the kind of channels that we do use, be it direct, be it via the legacy, existing vendors. But we have customers using portfolio management, portfolio evaluations, automated pricing, instrument pricing. It's used in the back office, front office, middle office. I mean, it's used across the whole raft of our customers' workflows, really. And touch upon what Sal said, we don't just now sell to the traditional customer base of tier one and regional banks. We have exchanges, we have vendors, we have utility companies, the buy side hedge funds and asset managers using their content now. So it's a real plethora of content and customers using that content, really.
And they're using that across front, middle, and back office, the same as it would be in the banks, as Sal described.
Absolutely, yeah, absolutely.
Yeah. Okay, the interaction with buy side is actually interesting for me, because it's not necessarily a segment that the interdealer brokers, the ultimate owners, have ever really interacted with. I mean, is that demand growing, Sal?
Oh, it absolutely is. I mean, without question, it is. I mean, if I think about it, going back to the days when I was on the IDB space before being here, I mean, this was something that well, technology wouldn't have allowed it, but I mean, other than that, it's definitely something that's growing because of the fact that we're reaching out with the idea that we are an interdealer broker. We've got very good, high quality, unbiased, open interest kind of flow to be able to look at. But separate from that, the goal for us was with our data science and analytical group is to expand the curves out further Because, for example, I mean, two of the things that we do with our data overall that is helpful is that we also help our broker desks in terms of being able to price bank customers who are getting specific requests from their customer base that are looking for pricing that is in need. So if we can give them reference data about what we believe that to be, like if you want to look at BRL 5 years out, that's something that is, we can provide that. And that's really important. And also the analytical piece of it is that it helps us from a market data perspective to sell to the alternative bases that we do sell to, which is, as Ian said, asset managers, tier one banks, regionals, I mean, within a bank, for example, we have multiple touch points.
Yeah.
It could be sales, it could be trading, it could be compliance, it could be bank surveillance. I mean, I have former colleagues of mine that I work with at ABN AMRO that are working at banks right now in the surveillance aspect of it. And they're saying that they're getting inundated because if you think about trade surveillance, their KPIs are tied to fine mitigation.
Yeah.
So they're vetting a lot of alerts throughout a day across asset class, and the need for alternative data sources is extremely important to them.
Yeah. Yeah. Something Sal picked up on there, or something Sal said there, I picked up on, Ian, is around that sort of the analytics. Obviously, firms like building their own analytics, and 100% that's part of your offering. But does TraditionData also sort of offer some, core level or entry level analytics for certain clients? Because, again, to come back to your earlier point, you've got a very varied client base. So I'd imagine the sophistication levels would be quite varied as well.
We don't offer analytics as a product per se. We have our own bespoke in-house analytics teams who are exceptionally very, very good teams who build our own models for the not just for the data business but the broking business as well.
Right.
We typically don't commercialize those because they are proprietary. But we certainly, we rely heavily on those teams.
And I guess it also helps if you're actually talking to clients, if you have those analytics. Yeah, if you're relationship managers, for instance, and have those analytics to back them up in a meeting.
Yeah, and we can provide, conventions and, some of the modelling around some of those prices. We typically don't give them too much information because it is proprietary, but we can certainly, give them some indication of how we built those particular models. Yeah.
Because it's a tricky balance, isn't it? It's like, you want to be able to help clients to use your data smartly, and some may need that help, but where others don't. So I guess it's an interesting balance trying to work that one out. How much to give away. Thus is life. Something I did want to sort of touch on, obviously, Sal, you started off with spot and NDFs, but we're seeing greater interest in FX swap. I mean, FX swaps is the biggest growing product in FX, but we're seeing greater interest in FX swaps and FX options automation. So do you see the data as, first of all, how important is it to have high quality data? Secondly, I guess the question will be, where does this alternative data, from your desks fit into this? And do you see this leading to a growing volumes in these markets?
Without question. High quality data is one of the mandates that we have, is constantly working on the quality of our data, only because the client base is wants so much of it, is demanding it more. They have a lot of data available to them. But the ones that really differentiate are the ones that are showing high quality data that kind of makes sense based on their analytics as well. Yeah. So, in the case of swaps, the FX swaps business was starting to make this transition just prior to COVID, and we knew it. And then that just accelerated it because it was very much around business as usual, remote, low volatility environment. Let's automate these swaps, these roles that we need to do, so on and so forth. And that's here to stay. There's no question about that. And with that comes an audit trail. And with that audit trail becomes the need for more reference data and more access to that market data. So without question, that's certainly something. I think in the FX options piece of it, it's much more opaque, still very nuanced. It's still something that I think there may be a place for automation in it in some capacity. Like we saw years ago, where the transparency in short-dated forwards became very relevant, and what we still see the need for the broker side when we're talking about larger open interest that needs to be moved and things of that nature. So I think that still remains to be part of it. But I think in the FX option space, just the longevity of the options desk that we have and the participants that we have speaks to the importance of that nuanced approach and extracting interest. Because again, the highest quality of data is coming from those desks as exhaust, coming from bank flow.
Yeah, yeah. And then just finally, and if I may, again, loosely acknowledging that other asset classes exist outside of FX, what's happening in the sort of commodities space and maybe the rate space?
So yeah, so I certainly took on the rate space. Yeah, I mean, we're seeing a big move away from the traditional IBOR benchmarks, as we know. The IBOR cessation happened now, so we're certainly seeing more OASs come to market, alternative reference rates. Certainly, that's a big part of our data offering now. For certainly in the rates business now is now these new AIRs. We've recently just launched a Mexican one-day funding rate, a shekel OAS rate, and a Destra Svesta Danish and Swedish OASs as well. So a lot of these curves or pricing and are not even being traded yet. They're still very liquid, but we're producing data products for them in readiness, one for our data customers who have been requesting the data, but two, readiness for the market to then to start actively trading them. So certainly we're seeing a big shift towards that in the market. That as well in conjunction with some of our new data science team in Switzerland, we're looking at building additional new models where we can price new additional and one weird and wonderful new pricing curves. But it's a busy time. It's a really busy time at the moment.
Well, you will be pleased to hear, Ian, that inadvertently you have just tapped into a very long and curious history by mentioning the shekel and the Mex in the same sentence. I'll explain that one to you offline, or Sal can explain it. I'm sure he was at the event where it first came up. Gentlemen, I mean, obviously data is going to be a growing factor in our business. It's been great getting your insight today. Thank you very much for your time, and thanks everyone for watching, and we'll be back again soon.
Thanks, Colin. Much appreciated.
Thank you.
Thanks.